What's up, guys? It's September 15th, 2023. We're going to do a breakdown of the bear trend and how they made money today. We're going to start off with yesterday's context, then talk about the market cycle, the first 6 bars and how we can place trades around them, where buyers and sellers were, and the patterns that made us money. Yesterday's context was an uptrend. We had a gap up and an uptrend. I think the uptrend yesterday caught people out today. Usually after a trend we would consolidate, and that's kind of what I expected today, a little bit of sideways or consolidation, but we did have news. And where are we in the bigger time frame market cycle? We're in a range. In a range, it's just buy low, sell high. Excuse me. I'm trying to keep, I like to keep them blue so we don't think, so it could just be, neutral, you know? So this is kind of the range lows and highs. Oh, did I lock that? No. You can kind of see. So this is where we're at within the market cycle, bigger time frame picture. Kind of like a head and shoulders, but that's not where I'm trying to get at. We're in a range. Look, buy low, sell high, buy low, sell high. We break out, we snap back to the fair value. Ranges are fair value. And that just means the market is in agreement. The market moves when it's not in agreement. So over here, it's undervalued. It whipped up. The market thought maybe it was overpriced, so it shot back down. That wasn't true, and we gapped it right back up into the range we were at last month. So the market's saying, okay, we agree here. The market agrees on this price for the moment. And yesterday, the bulls tried to see if we can get market acceptance higher. And no, they don't agree on the price. We're in a range. So they sell out their positions. We gap down. And we sell off to range lows. And look where bulls started to buy. They were buying the overall range lows. Still not a good buy for the day trader. But bigger time frame players see this as a range. So that's where we're kind of at in the market cycle. And that's how today plays a role overall in the market cycle. Now, if the market thinks this is still overvalued, maybe we sell off again. Or if the market's like, whoa, we like this price, then we're going to have maybe we go something like this, dip, go like that, I don't know. Like that, maybe. So we're in a range. Buy low, sell high, buy low, overshot, buy low, overshot, maybes, who knows? I don't want to put thoughts into anyone's head. Anything can happen. Those are the 3 outcomes. That's the market cycle. Now we can talk about the first 6 bars of the day and how that helps us read price action throughout the day. The first 3 bars of the day is just selling. It's a gap down and selling. This is continuation. This is continuation. This is minimum continuation. It's a 1-point bear bar, but it's continuation. Bears are selling lows. Bulls tried to buy the gap down and didn't work. They got trapped. They had to sell out. Bears are already shorting below bars. Sure, you could say the breakout from bar 1. So 15 minutes into the day, they're already shorting lows. This could be a sign for a trend. When the market makes a gap within 2 hours, when the market makes 2 gaps within the first hour, look for it. Think this is a rare occurrence and it could be a trend. And a gap, this is not the first gap. This would be a gap. This is a bear gap. Do you see? Kind of like that. And then here's the second gap. Those bull bars, something like this. The gap will go like that. Because that never got closed by a body. I'm still learning how to do gaps. So the market's showing selling pressure. And there's just 2 gaps within the first hour. By 7:10. Bears are getting momentum. The first 6 bars of the day are mostly bear bars. And I think it's just 1 bull bar. So this 7th bar was a bull bar. The 7th bar can sometimes be a news bar, so it can whip up and down and have a sudden burst of energy and then return. Bar 8's a double top, creates a micro double top bear flag, and they sell. So the first 6 bars of there is selling, and then we can think, okay, we don't see any buying pressure. Bears are clearly in the market, and throughout the day we can see that. Now let's talk about, okay, so we talked about yesterday's context. You guys know where we're at in the market cycle, and you guys understand the first 6 bars. Now let's talk about the buyers and sellers. This is interesting because there are no buyers. So selling pressure from the get-go. Bears are getting momentum. We can see they're keeping this gap open the whole time. This gap is staying open right here. So sellers everywhere. Sellers above bars, sellers below bars from bar 3. Even bar 2, I think, is like 1 point. I'm pretty sure that's a point. So they're making money. You could just wake up, hit sell, and make money. Okay? Bears are strong today. Selling, 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 selling. We get 3 flags. 3 flags and then a reversal attempt. 1. Oh, excuse me. Oh my god. 2. And I want to put some emphasis on these flags. That's why these are okay. Do you guys see the flags 1, 2, 3, and then we sell off again? But there's a very important price action characteristic about this that I just started picking up on recently during the bull trends. The longer the trend goes, the deeper the pullbacks get. Look at this first flag. Do you guys see that? Maybe I didn't see this as a flag until it already happened, but this is a flag because of the breakout right here. This flag has no pullback. I'm sure, okay, there's a pullback on bar 2, but it still closed the bear bar. And then look at this second. Okay, so if this is so we get 4 flags if you count this first one. Then look at this flag. Okay, two bull bars. Okay, we sell off again. Look at this one, a little longer. We have a doji, a 50% doji here. Okay, 50% meaning like there's no body. I see the line right there. There's more a bear close, but there's no like body for anybody. Then we get another sell, and this is the biggest sell within the trend. I wonder if this matches the leg down. Let me see something. This is the top of it. Okay. Yep, look at that. You guys saw me. I didn't expand it, so that's another way to tell if it's exhaustion is coming up. Wait, what the hell did I just do? Wasn't this right here? Hold on. What did I just do? Oh, okay. I pulled it from this bar. Okay, so there's a doji. So here's the gap down. Short. But look at it accelerated and then look at the pullback. It took this pullback lasted 2 hours. There's sellers clearly on top. Bulls don't even get a good looking double top. That's how strong the bears are, you know. Bulls would at least want to make a little bit of money, get out. They just kind of got like a dribble. So they're strong. Sellers all above here. And this started from profit taking. I don't even think bulls got in the market till maybe leg 2. And they do get 3 legs. So if you were a bull, you could leg count and make money. 1, 2, 3, and the third flag fails. On the topic of pullbacks, look how long the bull pullback is for the third flag. If we're counting flags for the bulls, this is also the longest pullback. Just how we're counting pullbacks for the bears, their final pullback is the longest too. So do you see how the market moves? It's fractal. It's like a kaleidoscope. When you look into a kaleidoscope, it's the same pattern folding in and out of itself. It just keeps folding in and out. That's what I've been thinking about price action a lot lately. And that shows it. Look, leg 1, leg 2, leg 3, and a long pullback. Leg 1, leg 2, leg 3, and a long pullback. Leg 1, leg 2, and a failed leg 3 in a range. Leg 1, leg 2 for the bulls. And barely a leg, nothing even happened. Both sides were just all over the place. So the market is fractal. It moves in and out of itself. We're leg counting the same way we counted these legs is the same way we counted these legs. but they're two complete different pictures. One starts with a pullback and barely making money. Bulls maybe get excited, people get trapped anyways. And the other one is a straight on trend. Both had legs, both had deeper pullbacks as they were ending. And the market is always in transition. So as their bull trend is ending, our bear trend is continuing. After we see 20 bars, we want to think of the market in a range. This bar can influence the range, and that's what we got here. One bar took out about 20 bars range. So back to the market cycle. Even the market cycle is fractal. Over here, we're talking about it in bigger time frame. Over here, the market cycle expansion, range, breakout. Bears keep the gap open right here, by the way. Bears keep this gap open. Breakout, into a range. So exactly what I explained here, buy low, sell high, is happening here. Buy low, sell high. Price action is fractal, which is crazy to me if you really think about how it's like a kaleidoscope folding in and out of itself. Let's get back to the patterns. So you guys know where the buyers are and sellers are. Buyers are at lows, sellers are at highs. Buy low, sell high when it's a range. Expansion range, expansion range. Gaps are staying open. We can see selling pressure right off the bat. No, bulls are not making money. So if you're buying, it's not a good day for you. Unless you wait till the end of the day and scale in. You could make money, kind of. Buy, and you make money around here. Just made some fresh coffee in the afternoon while we talk about the candlesticks. Okay, so the patterns, it's bear flags and ranges. Look, bear flag 1, bear flag 2. You guys saw the bear flags, I did them earlier. Bear flag 3, bear flag 4, bear flag again, but now the bears are losing its steam. So this is more of a range play than a bear flag, but it's still a bear flag. And we have this giant bear flag too, can't go unnoticed here. And this is also a bear flag, but it has a lot more bullish pressure. So bear flags can fail at the bottom of a range or at the bottom of a range. There's a good chance this fails. Unless we have a gap down and, unless we have a gap up on Monday, or a gap down if it fails. So I'll just go a quick recap. Yesterday's context was an uptrend at the top of a range. We gap down and sell off to the bottom of the range, and bulls pick up the price. The market cycle is we had a downtrend in an overall range. This was a downtrend. This was a bear leg in a range. The first 6 bars are steady selling pressure with bear momentum from the gap down and selling pressure. 1, 2, 3, 4. The first 4 bars are sellers. 1 bar maybe taking profits. That's about a 5-point scalp, so it would be natural to see some profit taking. And then we see it again, a micro double top, and it's just sellers. Buying, I think, is more profit taking today until we get to the last 2 hours of the day. And the patterns, bear flag after bear flag after bear flag. I have these 10-point increments now, and we try and play in ranges a little bit more and go for 5, 10-point scalps, and we'll see how that goes. If you guys learned something, hit the follow button. Have a good weekend. Make sure you study. Have a good one, guys. Bye.